we're jumping straight into Lumentum Holdings today. Everyone is watching the price action. But the real story is the massive optical infrastructure build-out fueling the AI revolution.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds, if you want to stay ahead of these market trends, get these breakdowns delivered right to you, make sure you subscribe and hit the like button. It really helps us out.
So Lumentum, it feels like we're at a genuine inflection point here.
It really does. I want to start with the headline number that dropped recently because it honestly made me do a double take.
Okay.
We're looking at Q2 revenue hitting $665.5 million.
Right.
That is up over 65% from last year. I mean, you look at the chart, it's practically a vertical line.
That is a staggering year-over-year increase for a hardware company. Usually, hardware, it moves in these slow cycles.
Yeah.
This is a step change.
Right. And this isn't just a little bump. When you see a jump like that, it feels like a shift in the tectonic plates of the data center world. But I want to push back a little on the excitement. Revenue is great, sure, but, revenue is vanity, profit is sanity, right? Are they actually keeping any of this money?
That is the right question.
Sure.
Because historically, this whole sector has just burned cash chasing growth.
Yeah.
But let's look at the bottom line. This is where the turnaround story gets really stark. If you rewind the clock to this time last year, Lumentum was bleeding.
Oh, I mean...
They lost nearly $143 million in that period. It was ugly.
It felt like the sky was falling, inventory pileups, customers were canceling orders.
It was the perfect storm of bad news.
Yeah.
But fast forward to right now, they just posted a net income of over $82 million.
Wow.
That is a massive swing. They went from a huge hole in the ground to, piling up cash.
Okay, so that's a swing of what? Over $200 million in profitability. But let's play devil's advocate here. Is this just because they, fired everyone and cut costs to the bone, or is the business fundamentally better?
It's a mix, but the magic word here is operational leverage.
Okay.
And this is a concept that I think gets misunderstood by a lot of retail investors.
All right, let's unpack that. How does it work here?
Think of their factories like a massive airline. It costs a fortune to fly a jumbo jet from New York to London, right? You have the fuel, the pilots, the landing fees.
All fixed costs?
All fixed costs. And that cost is the same whether you have 5 passengers or 500.
And last year, that plane was flying half empty.
Worse. It was flying empty. They were just burning cash, keeping the lights on. But now...
The plane is full.
Every single seat is taken. And because of those fixed costs, the R&D labs, the expensive fabrication plants, are already paid for, that extra revenue from this AI boom is almost pure profit.
So the cost to add that 500th passenger is basically what, a bag of peanuts?
Exactly. That is operational leverage. They aren't just selling more. They hit a tipping point in their cost structure. And that's why you see the non-GAAP gross margin expand to over 42%.
Which is a very healthy number for hardware.
It tells you they have pricing power and their factories are running at that sweet spot.
Okay, so the financials are rock solid right now. The plane is full. Let's talk about the why. Why is the plane full now?
Yeah.
We keep hearing about this AI revolution, but usually people are talking about chips. They're talking about NVIDIA, the brains of the operation. Why does an optics company suddenly matter so much?
Because the brain is only half the equation. We're seeing what we call the hyperscaler CapEx wave.
The numbers are just mind-boggling. We're talking about a $700 billion spending wave from the big players, Meta, Amazon, Google.
And they're pouring concrete and buying silicon like there is no tomorrow.
Right.
But here's the analogy I like to use. Everyone focuses on the brain of AI. Those expensive H100s or Blackwell chips.
Yeah.
They get the headlines. But a brain is useless if it can't communicate with the rest of the body. If you have a genius-level IQ, but your nervous system sends signals at a snail's pace, you're not going to be very effective.
Okay, I like where this is going. So NVIDIA is the IQ.
NVIDIA is the IQ. Lumentum provides the nervous system. They make the photonics, the optics, the components that convert electrical signals into light and shoot them across fiber optic cables at, light speed. Without that nervous system, you just have a really smart chip sitting there waiting for information.
That's a great way to visualize it. So these massive data centers need to talk to each other instantly, and Lumentum builds the pipes, or the light tunnels.
The light tunnels, exactly.
But wait, we've had fiber optics for decades. The internet runs on this stuff. Why is this specific moment the inflection point? Why not 3 years ago?
That's a fair question. The difference now is the density of the compute. In the past, you could get away with copper wires for short distances inside the rack.
Yeah.
Copper is cheap.
It's easy.
It's easy. But as these AI models get bigger, we're talking trillion parameter models. The physics of copper just breaks down. It gets too hot.
Yeah.
The signal degrades too fast.
So they literally hit the laws of physics.
They did. And that brings us to the real moat here. It's not just cables. It's about optical circuit switches and co-packaged optics.
Let's dive in on this because I see optical circuit switch in the report and my eyes kind of glaze over. But you're telling me this is the secret sauce.
This is the crown jewel. To understand it, you have to understand the bottleneck. Traditionally, a network switch is a translator.
A translator? How so?
Well, think about how data moves. It comes in as light through a fiber cable, but a normal switch is electronic. So to cache the light, use a transceiver to turn it into electricity, read the data, route it, then turn it back into light.
That's the OEO conversion, optical to electrical to optical.
Right. And that translation takes power, it generates heat, and crucially, it adds latency.
And heat is the enemy in a data center.
Heat is the limiting factor. But Lumentum's optical circuit switches, these OCS units, they don't translate. They use tiny microscopic mirrors to physically reflect the beam of light from one port to another.
Wait, so the data stays as photons the entire time? It never touches an electron?
It never becomes electricity. It's a mirror game. You're literally bouncing light beams around using MEMS technology.
That sounds incredibly difficult to manufacture.
It is remarkably hard. You need precision at the nanometer scale, but the payoff is huge. You slash power consumption. And when you're Amazon running a gigawatt scale cluster, that saves millions in electricity bills. That's the real moat.
And I imagine that creates some serious stickiness. This doesn't sound like something you can just swap out.
It's incredibly difficult.
Right.
Once you design your data center around these optical switches, once you build a mirror maze, switching to a competitor like Coherent is a nightmare.
So Lumentum digs in like a tick.
A very profitable tick, yeah.
Nice.
You can see that in the backlog. They mentioned a backlog of over $400 million specifically for those optical circuit switches.
That's confirmed demand. That's not a maybe. That's orders waiting to be filled.
Right. It gives investors a lot of visibility.
Speaking of visibility, the forward guidance was pretty wild. They're guiding Q3 revenue to between $780 and $830 million.
Which is another huge step up from the quarter they just had.
But here's where it gets really interesting for the long-term holders. The consensus for fiscal year 2027 is sitting at $4.7 billion.
Think about that. We just celebrated a $660 million quarter, and the market sees a path to nearly $5 billion a year.
It really paints the picture that this is not a one-quarter wonder. It's a multi-year story.
You have the immediate turnaround and this long runway of growth fueled by the biggest companies on Earth.
It sounds perfect. Almost. Too perfect.
Well, nothing is ever perfect in the market.
Exactly. So let's take the rose-colored glasses off.
Right.
What is the bear case? Because when a stock runs this hot, there are always risks. And I saw something in the filings that made me raise an eyebrow.
The insider activity.
The insider activity. Yeah.
Right.
We had a specific executive listed as exec retort who sold $26.6 million worth of stock.
That's a significant chunk of change.
And the timing. Right after the earnings beat, the stock pops and bam, they cash out.
Now, to be fair, you have to look at the context. The stock had just rallied, what, 24%?
So just taking some chips off the table. I mean, look, if my portfolio jumped 24% in a week, I might be browsing for a new beach house. Is this a panic signal or just someone buying a yacht?
It's the classic Rorschach test for investors, isn't it?
Mm.
On one hand, executives have trading windows. They can't just sell whenever they want.
Right.
So maybe it's just estate planning, diversifying. But on the other hand,
If you were so confident about that $4 billion future, why sell now? Why not wait for the double?
Exactly. It suggests a valuation ceiling. It tells me they think the easy money, the recovery trade, might be done. Now the company actually has to execute.
And that execution isn't guaranteed. Which brings us to the second major risk, dependency.
The hyperscalers, Amazon, Google, Meta, they are the whales.
And Lumentum is hunting whales, which is great when you catch one, but
What happens if the whales stop swimming
if that $700 billion capex wave slows down,
or gets delayed? Or, and this is the nightmare scenario, if one of them decides to design their own optics in-house.
we've seen it with chips. Apple ditched Intel. Amazon has Graviton.
Precisely. If Google decides, hey, we can build these mirror switches ourselves, Lumentum is the first to feel that pain.
So having a few massive customers is a double-edged sword. Massive orders, but massive concentration risk.
That is the history of hardware.
Yeah.
Suppliers get squeezed.
And then there's just market sentiment. The stock has already jumped so much recently.
Right.
You have this fear of, AI disruption causing a rotation.
Yeah.
Is the good news already priced in?
That is the eternal question. When news sentiment scores stay neutral despite a massive beat, it tells you the market is hesitant. They're waiting for the other shoe to drop.
So you have to ask yourself if you're chasing the bus after it's already left the station.
Or if the bus is just shifting into second gear on a very long highway.
I like that. Okay, so for the listeners trying to figure this out, what should they be watching? Let's say next 30 days.
The immediate trigger is the next earnings call. That's coming up in March, Q3.
They guided for that $830 million top line.
They need to hit that. If they miss that after all this hype, the stock will get punished. But more importantly, I'm watching the margins.
That 30 to 31% operating margin they promise.
Exactly. Revenue growth is great, but investors want profitable growth. If margins get squeezed, it's a bad sign.
So revenue is the gas, but margins are the engine temperature.
Perfect. And then, so you got a bit, we have some conferences coming up.
Right, the investor conferences, any news on Vera Rubin or things like that post-CES?
And what we're looking for there is just confirmation. We want to hear Amazon or Microsoft saying the words optical switching.
It validates the whole story.
It does. And there's one wild card to watch for. The rumor mill is buzzing about a potential short squeeze.
Oh, really?
Yeah, some traders are betting against the optics boom, thinking it's a bubble. If Lumentum keeps posting these numbers, those shorts have to cover.
So we could see some fireworks. Okay, let's wrap this up. What's the lowdown?
The lowdown is that Lumentum is the classic picks and shovels play for the optical age. But it's not the gold rush where you sold cheap shovels to everyone.
Right.
Here, you're selling giant high-tech excavators to 3 or 4 massive mining companies.
That's a great distinction.
It requires the hyperscalers to keep their checkbooks open. If they do, Lumentum is positioned perfectly.
But you have to be comfortable with that concentration risk. You're betting on the CapEx budgets of big tech.
You are. Which, to be fair, seems like a pretty safe bet right now given the AI arms race.
It does. But, trees don't grow to the sky. And that brings me to a final thought I want to leave with you.
Okay.
We spend so much time obsessing over the chips, the GPUs, the brains. We know they're being bought by the truckload.
Hundreds of billions of dollars worth.
Exactly. But have we underestimated the cost of the wires that connect them?
That is the question.
Think about it. If you build the world's fastest brain but you connect it with slow nerves, you just wasted billions. If the infrastructure, the optics, the switches doesn't keep up, does the AI boom hit a speed limit?
That is the hidden risk of the whole sector, latency. We might find out that the limiting factor isn't how fast we can think, but how fast we can listen.
We might find out that the most valuable real estate in the data center isn't the server rack, but the cable tray connecting them.
That would be a paradigm shift.
It certainly would be, and Lumentum is sitting right in that tray.
Waiting for the light.
Thanks for listening to the Easy Money Show. We'll catch you on the next move.